The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. The first chart that I'm going to post into Tiger TV today is from my trading partner and buddy, Jim Bartolione. He is a retired Navy pilot, and we've been working together for well over 10 years now, and he had been talking to me about silver for the past, several months, that he thought it was going to get to near the $14 level. And as you can see from this chart, we have a beautiful three-drive to a bottom pattern forming down here at 1405. Folks, the big news is silver and gold today, because silver has had the equivalent of a 150-point move in the S&P. Silver was down $1 and then up $2. It's had a $15,000 swing today. That's just that's basically in the outlier event that you hardly ever see, but it's a $15,000 move, 5,000 down and 10,000 up, and it looks like it's just starting. This three-drive pattern completed. The low on the day was 14.15, and it's had one heck of a run. Gold did not make a new low. The low on gold overnight was at 14.38, and the previous low we had was 14.31. So that it held above that, and with the market with gold rallying over $50 an ounce, the gold miners are probably going to hold up today above that double bottom that we had from last week. So this is an incredibly important day, I think, for silver and gold, given the volatility. I happened to be watching it last night when it came on because I wanted to see how the market handled the Swiss referendum. Switzerland basically said we're not going to use gold to back our currency. We're going to use our desks and chairs and a few of the paintings that we have, and some of the flower pots that we have along the walls will be used to back Swiss currency now instead of gold, which makes a lot of sense given the situation that we're in this environment. Now, I know this is not the commodity show, folks, but we've had some really big things happening in commodities, I believe, today. And because we've been talking about this deflationary thing for so long, that this is going to be a real interesting time period for the stock market. I'll show you in a second why I think stocks are interesting. But we're going to take a next look. We're going to look at copper, because copper also completed a three-drive pattern on the yearly basis. The low from 2012, 2014, and where we are right now, all that comes in at around $2.77 in copper, and the low today was $2.76, and it too has had a huge rally. So that's telling us that these markets have hit some major supports in silver, gold, and also platinum. We put platinum into the picture, if you remember, from our good friend Mr. Z, who shared this with us a few weeks ago. The 61% retracement came in at $11.95, and platinum has held up incredibly well also. So all those commodities in the metal markets have made some type of a real strong support. Now, this has been a bear market for a long time, so this is probably just going to be a bear market rally. However, we have to pay attention to it because of the way that it's coming out of here from these patterns. That's really what we have to look at, and that's what we really want to see when we're watching something, that's happening like this. And that's, I think, what we really learn is to follow the patterns and let them tell us what it wants to do. But so far, it has held up, exactly, where we wanted it to come to. So we'll just keep in mind that that's what we're watching. Now, the next one that I want to talk to you about is what I think is the most important chart of the day. In fact, I didn't believe it could happen until I saw it happen. And that is, this is a New York Stock Exchange index for Friday. and Monday. Friday is historically the most important day for a positive close of the whole year, of the 250 trading days, 250 trading days a year, and of those, this is the most positive of all those 250 days. The reason for that is it's the day following the Thanksgiving holiday, and it is also the smallest volume day that we have in the stock market, but it has a probability of being up better than 75% of the time. However, if you're in an up year like we are, if you're in an up month like we are, and an up week like we were, the odds of it closing down are almost it's less than 5% of the time the market could close down. Not only did it close down Friday, but it gapped down Friday. That's a big thing, folks. I mean, I really think that means something. Maybe I'm just, grasping at straws, and I'm pretty good at that, but that's a very important phenomenon. I mean, there wasn't anyone wanting to bid up stocks on Friday. And what happened today? We gapped down again. Well, if you go back to look what happened in September after we made that secondary top around the 22nd of December, what did we do? We gapped down. The next day, what did we do? We gapped down. Go back to July and see what happened after the 28th. We gapped down, and then we gapped down hard on the next day. So keep in mind that this could be something, to fall back on. I know it's different this time, but we still should pay attention to it because it's it's an important phenomenon technically from my perspective anyway. That's what I think is important about it. But with gold, silver, and copper and platinum all bottoming, we know that we're getting some type of a bounce getting ready to occur. Now, we want to look at the couple of the things here that I think that are important here is the that 5-point reverse wave that we've had. We've completed that now in the S&P cash. On the weekly basis, it got up to the 1.27 of the high from early mid-September, and also it made the expansion number from August. So that one has completed. The only ones that did not complete, and I think that's worthy of taking a look at them, is one is the IWM. Also had a divergence, but the IWM has something really interesting that occurred Friday that I think is worthy of our attention, and that is that we had the not only do we have the head and shoulders pattern in the IWM going back from March, which was the left shoulder, the head being in mid-June, and the right shoulder occurring last week, and then again Friday the market gapped down also and had a very wide-ranging bar to the downside, but it was also completing at that time on a daily basis. It was completing the 1, 2, 3, 4, 5 expanding triangle pattern known as the jaws of death, or the T6 pattern, or the reverse point wave. It has a lot of different names because it's a positive expectation of that pattern working. And it doesn't work all the time, of course. Nothing works all the time, but that's one of the better ones that Gartley had talked about in his book was that T6 pattern. Now we have this 3 different patterns that are giving sell signals here. We got the head and shoulders pattern. We have the 5-point reverse wave pattern happening at the same time. In addition, we have the lower tops and lower bottoms in this over the past 5 or 6 months. So this is also a divergence that is occurring here in the small caps. My good friend Bert Doman from the Wellington Letter had a really interesting comment to make about the Russell 2000, and he said it was one of the more difficult indices to manipulate. I don't know what he meant by that, but he felt very strongly that the Russell was a better indicator of what the market was doing than some of the other indices. That's up for grabs. I don't know. I'm just giving you the information. All I'm saying is that that's what he is thinking, and that I don't know. All I know is this chart looks awfully bearish. Head and shoulders patterns are pretty good. When you add to it, you have a 5-point reverse wave coming in at the same time, and you have a gap down in the indices on Friday and again on Monday. That should tell us that we're pretty heading closer to the downside. Would be my opinion. the moves that we're having in commodities today, they absolutely overwhelm what's happening in the stock markets, minor losses that we're having. We had a $50 move in gold from low to high, $10,000 move in silver from low to high, and from early morning it was down 5,000 and then up 10,000. Platinum has moved strongly, copper has moved strongly, and so all of those are coming in. But we've got one that we've been on the watch list for a very long time, and that is our crude oil contract. West Texas Intermediate Crude hit a beautiful pattern today. If you'll give me 1 second here to put this up, you'll take a look at it, and we made a perfect, if I can get this to work, there we go. We made a perfect 61% retracement down here. The market went 40 cents below the 618% retracement. Has rallied $4.50 a barrel, which is $4,500 so far today. But last night it traded just a tiny bit below the 61% retracement when gold and silver were getting hit really badly. And that was interesting to watch that whole phenomenon. I happened to be watching silver and gold when the open came because I was aware of the Swiss referendum failing, and so I wanted to see how much selling volume was going to come into gold and silver, and so I put them on my watch list, and I watched the number of contracts traded. And folks, silver went down from 1505 an ounce down to 14.15 per ounce on a very, very small number of contracts traded. I think I was visually counting them, and I only saw about 300 contracts, twos and threes and fours. I saw no large orders in there at all. And believe me, once it hit 14.15, I did not see another trade until 14.35. I thought my machine was wrong, but it went from 14.15, and then there was an immediate 20-cent jump, and then increments higher, and it was up when it got up to around 14.50. It started trading in 1, 2, and 3 cents at a time again, because usually it just trades a penny or two at a time. But when it was making the bottom, it was a really classic spike bottom. There was nothing down there. I mean, there wasn't enough for sale down there or to buy that you could have even gotten anything on. So it was a very interesting way the bottom was made. Gold was a little differently. It got down to the 1440 level, messed around 1439, made the low around 1438. What am I talking about? 1100. Well, it stopped around 1141, went down to 1138, then up to 1150, and then backed off a little bit, 1146. It stayed there for several hours as silver was gradually rallying. And finally, gold started to move, and once it got above the $1,160 per ounce level, that tells us that it was getting ready to go a lot higher. So we're going to take a little break here, pay some bills. We've got the metals up, the stocks down a little bit, and everybody is still working off their turkey.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. And I posted into Tiger TV today the investment sentiment chart that Stock Charts puts out. It basically shows the bulls and bears situation, you know, the people bullish versus the people bearish. And as you can see, since October the 15th, this market has gone pretty much parabolic. Looks like an apple chart if you wanted to take a look at it. It basically has gone doubled in price from about 6.5 up to 15.85. On a percentage basis, this exceeds where we were by a great deal in 1929 and also in 2000 and 2007. I know it's different this time, but it's I think it's necessary that we take a look at this because there's a possibility that maybe the economic thought could change here and the market could have a 1% sell-off or something like that. But whether that happens or not, we'll have to wait and see. But it does have a possibility of the move going a great deal higher, but I don't think it's a high probability of doing that because historically it's such a high level. That doesn't mean it can't go higher. We've seen this happen more often than not, but it's another thing that makes us wonder, why the market is up where it is. If you look at the charts that we've used before, I don't have one today, and that's on the number of the margin debt situation. It looks exactly like the bull and bear chart. We're in record levels of using margin, to buy stock, which also is another indication that the market is in a very precarious situation. Looking at all the charts over the weekend and the sentiment that I'm seeing, there's only one way this can end, folks, and it's going to end badly. My opinion is that the Fed has done something that they're experimenting with, that is they're experimenting to try to change the economic cycle. And folks, there used to be a commercial many, many years ago for butter. It was for margarine, and it was, it's not nice to fool Mother Nature. And that brings the old thing about, when I was a little kid, I hate to bring this up, you folks don't even remember this, a few of you might, but when I was little, when you bought margarine, you had to mix the yellow dye in with the white, the soybean oil, because that's how it got to be a yellow color. It wasn't until much later that the Butter Institute finally gave up, and they were able to add margarine and color together so that we have all these different synthetic butters that are out there now that taste just like butter. It's just that it just took a long time for them to get there. I'm talking about going back into the 1950s and 60s. But now that's all changed. So things do change. We'll have to wait and see. Someone asked a question about the shopping, how much shopping was going on. These figures are just like the employment figures that we get out. I know they massage them any way they want. And, they have online shopping now that is a great deal of stuff to do, but, who knows. We got our first caller. We're almost for the break, but we'll start it, and then we'll see what Brent from California is on. Brent, what can I do for you?
How you doing today, Larry?
Hanging in there all right, my friend. How are you?
Okay. All right. I'm sorry I didn't catch the first part of the show, so you might have already talked about this, but I would love your opinion on the price action in gold and silver over the last couple of days.
Well, that was the whole part of the first show, but let's repeat it because Brent, I really believe that it's worth repeating, honest to God, because you just don't see moves like this. Silver started down $5,000 a contract early Sunday. Then it turned around and has rallied $10,000. So we had a $15,000 swing in silver. We've had about a $70 swing in gold, a $2,000 swing in copper, and platinum is on the move also. So something really big happened with the silver, gold, and platinum cycle over the weekend. Whether it was the trigger for this Swiss referendum or not, I don't know, but there was a lot of buying down there at that point. And the way the market came out of there, once it started, it appears to be that short covering, really kicked in. Now, what's really going to be important tomorrow is that we look at the open interest figures of what happened with gold and silver today. If you see an increase of gold and silver, a good increase in open interest, say 5%, this thing is on its way. That's just flat out what it's going to be, because that's just the washout. It hit a beautiful 3 drive to a bottom pattern in silver at just under right around $14.25 an ounce, and that's what it looks like to me. So stay with us, Brent, and we'll take your other question in just a minute. Okay?
Sure. Thank you, Larry.
You bet.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have our friend Brent from California on the line. Brent, are you still there?
I am, Larry. I guess the bigger question I had, you've been around the markets obviously a long time, and I just can't imagine something like that happens very often. And it's because of the rarity, what do you make of it? I mean, there must be something there that signals, or maybe not. Maybe I'm making more out of it than there really is, but it just seemed unusual what happened.
Well, I don't. That what was more unusual for me was the extreme volatility that we had. You know, for the market to, for instance, taking silver, for the market to be down $5,000 is a considerable amount. That's a large amount, and then to turn around and go back up $10,000. Go back and look the number of times you've had a $15,000 swing in silver. You'd have to go back 2.5 years ago when the top was being made at 49. And remember now, we're 2/3 of that value now. You know, we're down around 14 instead of 49, and so, you know, we're basically we're trading in a third of the value, that we're getting volatility that is far greater than we had at the top. That tells me that this was some type of a cycle bottom. And then if you look at the first chart that we posted here into Tiger TV today from my partner, Jim Bartolioni, you know, he was looking for this to come down to the $14 level, make that 3 drive to a bottom pattern, for quite some time, and I didn't think it would make it, but by golly, with that Swiss referendum, it happened, and then the market, turned on a dime and, really, shot up quite a bit, and it's given none of it back. I mean, it's just, it's stayed here. So the open interest tomorrow in silver and gold is going to tell us a lot about whether this is just a short covering rally or we had new buyers coming in down at that level, and that'll tell us where we are.
No, I thought it was interesting that you just mentioned that chart. That came out, I think, it was over the weekend before it ever hit that 14, and so it was definitely interesting to see it before it actually happened. You had sent that out. It was going to get down to, it could potentially get down to 14, and that's exactly what it did. So that was pretty telling.
Well, it sure did. And if you look at the oil market, the oil market did the same thing. We had a 61% retracement in crude oil. We've had a 61% retracement in our gasoline, went exactly to where it should have gone to. And we did the same thing in the heating oil. The heating oil did the exact same pattern that we had in crude oil and also in the gasoline, but it made the 786 retracement, in which that's hard to believe because, heating oil usually this time of the year has a strong seasonal, but we did get down to the $2.15 level in heating oil, and we rallied well over 10 cents in that also today. So that's had a big move, but nothing like what happened in crude oil. Crude oil was the really big one that tipped off that it wanted to go because it hit 64, went a little bit below 64, and then, oh my gosh, it just took off and never looked back. So right now it's $5 higher than that. And that's nothing, when the market went from, 108 down to 64, we could rally all the way back to $90 a barrel, and it's still a bear market.
Exactly. Well, I really appreciate you going through that all again. I didn't mean to make you do it twice, but
I enjoyed doing it twice.
Well, you take care, Liz. It's always a pleasure to talk to you, and I really appreciate your time and the fact that you did that for me. So.
I'm sure we'll talk before the holidays, but I want to wish you and Leanne a really wonderful holiday, Brent.
Same to your family. Take care, Larry, and I'll talk to you soon.
You bet.
All right, take care.
Okay, that was our friend and avid TFNN listener, Brent, from California, up in the cattle country of California. By the way, we could be setting up for a sale in cattle. We thought if they got below 169, they could be setting up for a sale in the cattle after the three drive to a top pattern that we talked about last Thursday. Well, it wasn't that Thursday; it was Wednesday. We talked about it because Thursday was Thanksgiving. So, we'll see what happens. Frankly, folks, when we look at the thing that we have going on here with the markets and stuff, this volatility is indicative of some type of a major cycle event occurring, especially in the metals, and it looks like some of the other commodities are also starting to move a little bit, but nothing like what's happening in the metals. The real key is to follow this open interest for today and tomorrow in the gold and silver, because if we get increases in open interest, this thing is off to the races, folks. Get ready to step in and buy some, because that's what brings the people into the business is more buying, and that's what open interest tells you. And but if open interest drops, that's not a good sign. This will just be a short covering rally, and when that's over, it'll start back down again. So this key will be in the open interest figures for the first 3 days of this week. By the way, there's a statistic that we talked about last week, and that is that the market has a strong probability to be up the last 3 days of the month and the first 3 days of the month. And if we're down the first 3 days of the month, this is only the first day of the month. That's easy to figure out because it's December 1st. Now we're going to have a test now. What would be the second day of the month if December 1st is the first day of the month? Oh, it's got to be December 2nd. So this is really tough mathematics that we've got going on here at on my show anyway. But if we're down these first 3 days, Monday, Tuesday, and Wednesday, that is a very negative indication, especially coming off of the holiday season. And, we got a lot of things that were overbought. I don't think there's any question about it. If you look at the the bull bear, if you look at the fear index, if you look at, the margin debt, all this stuff is just, way overblown. All the patterns are completing. I mean, it's there and yelling and screaming at us, but unfortunately, I'm the only one that's yelling and screaming about it. There's one other person, but he's in a sanitarium in Upper New York, and he's in a padded cell, and so he's not able to communicate with the public. Fortunately, I still am, or unfortunately, depending upon your view of the market. But it certainly looks really negative to me. I haven't seen it this bad in a long time, and yet everybody thinks it looks so good. But that's neither here nor there. Sometimes it's chocolate cake, sometimes it's strawberry cake. It depends on what you put in the cake. So we'll have to see what happens to this market before it's all over. We closed down really strongly this week. Dow down. If the Dow should get below 17,500 this week, you got some real problems, because this thing will really start to roll over, and a lot of it will be the gaps if we have them, and if we have long-ranging bars, that's going to tell us how serious people are, about getting out of it. But usually when something like this happens, with a stretch like we've had, they hit it really, really bad. They punish people for their bullishness. And that's just my history of looking at these markets. Very seldom do you ever see that going on. So we got a call from New Jersey. Dan from New Jersey. Are you there, my friend?
I am, Larry. Good to hear from you.
Good for you to call in.
To you. Thank you, sir. Quick question. I looked at, I was listening to your comments on silver and the moves, but I'm looking at some of the miners, both gold and silver, and they're up a bit, but not anything, it's a move like 5% in Great Panther, but that's not much of a move considering the way it does move.
I understand.
And I wanted to get your comments on that.
Well, let's just take a look at gold trading at, say, 1,150. 5% of that would be $70 an ounce, correct?
Yes.
And that's what gold has moved today, $70 an ounce. So that's exactly what it's doing, is that it's moving the same percentage because it's smaller and has less volatility. Less price, it has less volatility. But if you had $5 million in GPL and $5 million in gold, you've made the same amount of money.
Okay.
Do you follow me?
Now, would you wait for tomorrow for a small pullback before getting in, or?
I'm not sure what's going to happen. I think that the gold miners are so underperforming that you could just buy those and put your stop under the low we made last week, and or watch the price of gold, because if the price of gold gets below 1,100, you don't want any of those things. But I think if you wait a day or two, it might be a chance to, a little bit of a pullback, because I think the overall market's still going to have some pressure early this week, and that could affect the gold miners a little bit. But remember, the gold miners came all the way down when the stocks were going all the way up, so it wouldn't be surprising to see the gold miners go up and stocks go down. That's not unusual.
Okay. And one other question, I guess more of a fundamental, and I guess what I'm asking you is, as a commodity, or as for your cycle work, what has historically happened to gold and silver prices in a deflationary scenario? Because as much money as the government's been printing, it really is very little. I guess there's some real estate price inflation, but it doesn't seem like inflation is going to be the outcome. And I'm wondering if it's more going to be a deflationary scenario where it's just
Well, that's the $64 question. You see, the Fed seems to be worried about deflation, as is the Bank of Japan. But frankly, you mentioned real estate. Real estate prices are up. Parts of the U.S. and parts of the world economies like Hong Kong and London and other places, Sydney and Melbourne and Auckland and And San Francisco, they've not seen any deflation in their real estate. They're higher than they were in 2008. Other places, like Los Angeles and Tucson, Arizona, and Phoenix, and Las Vegas, and parts of the South, Atlanta, they haven't recovered as much. So it's a mixed bag there. But the overall prices are not deflationary. Anybody that's gone to the supermarket to buy anything for the Thanksgiving holidays realize that prices are way up. The only thing that's down, of course, is our oil prices. We've got oil here in New Jersey is under, I think it's trading at around, or selling it for around $2.50 a gallon. And that's a really a cheap price. It hasn't been that low in 5 years. So that's a little bit of a tax rebate to the consumers. The fact that they don't have to pay as much for gas, but they're paying up for everything else. I mean, you look at beef. It's doubled in price. Pork is up 50%. The grains have come down, but that's basically they turn that into meat. They feed the grains to the animals. So there's not been a lot of deflation that I can see. I see that. Well, we have, 40 million people on food stamps, so something must be wrong somewhere.
I hear you. All right, sir. Well, listen, I appreciate your show and your time. And,
well, thank you for calling in, Dan, and a happy holidays to you and your family.
Thank you, sir.
You bet. One thing I look at this, I've been trading gold and silver since they first started being traded. Silver started traded in 64. Gold started to be trading in 72. And I swear, if you showed me these numbers that we have for M2 and the fact that the Fed has gone from a 700 billion asset sheet to 4.4 trillion, I would think that gold would be trading at $5,000 an ounce and not at $1,200 an ounce. But things are different this time. People, the old gold guys are pretty much gone by the wayside, and I guess it doesn't mean as much anymore. But frankly, I think what's happened in Switzerland is a roll call. They basically said, we don't need gold for this. And what did gold tell them today? The gold says, oh, yeah, I'm still here. I'm still alive. We've got game. And I will say this, if we get a big increase in open interest today or tomorrow and this price of gold and silver keeps going up, this is a for real move, folks. This could really be one heck of a move. It could easily move, a 38% move in these markets will take, gold back to 1,400, and it gets above 1,400. It's a real short jump between 1,400 and 1,900. And after that bottom that's come in down here, which is, right near that Fibonacci level that we've talked about many times here, is the fact that, we've held that level, and it looks like it has a potential. You look at a long-term gold chart, I'm going back 20 years, it doesn't look that bad. The low was made in 2003 at about $260 an ounce. We went up to 1962. We backed off to 1,100. That's pretty much what Apple did when it was doing its run to $700. So there's not really much, not much happening there from a bearish point of view, especially the way that the market handled this bearish news. It could have very easily had gold down $100 today, but that didn't really happen. So we'll see if that's going to mean anything or not. That's all I know for sure. I think the key in the gold and silver is the open interest, and I will be following that. I will be reporting on it. If it's really something significant, I'll call in tomorrow on either Basil or Steve's show and try to give you the information, or somebody else will probably also do it too, because there's some really smart people here in the chat room at TFNN, and if you want some really good trading buddies, this is a good place to come in and give, listen to what they have to say and give your views and stuff. It really is, it stays pretty good. We'll be right back after this break, and I will post that chart of silver one more time.
Today
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and I posted into Tiger TV the chart of the silver that Jim Bartolioni did, looking for this 3 drive to a bottom pattern that we had to come in around that $14 level. And silver's closer to $17 than it is $14 right now because of the move that we've had. The next caller had a question about the Japanese yen currency versus the U.S. dollar, and I've posted that one in because I think it's very important. Last night we made a higher high on the week. The other high that we made was at 119.04. And then last night, during a report, the market hit 109.10. It made a higher high by 5 pips and then immediately broke 100 pips. That is a sign that a market is really probably hit it, because the 61% retracement was right in that area of 119 and change. So it's very, very close to being looking at that. Now, there's a high correlation between the Japanese yen currency and the Nikkei, and there should be, because all their money that they're taking in from the yen, they're putting it into their stocks. And if we take a look at the Chinese stock market, on a long-term basis, looking at the weekly, you'll see that we're made a 3-drive to a top pattern. If you'll notice the last week in October, when they brought it out on Christmas Eve, it was their trick-or-treat for the world, and that market jumped 7%. Well, it jumped 7%, but since that time, it's basically done nothing. And it hasn't even taken out the highs of last week, given all the bullish news that they're trying to feed us from Japan. But that is a 3-drive to a top pattern. No question about that. It's got a chance of, turning the market down from here, but it's got to start down. The yen started first, if that is in fact what's happened today with this 100-pip break that we've had. So we'll see what's really happening. I looked at the long-term market for China, the FXI, and it's still in a bear market, folks. It's just making another Bear Gartley pattern right now as we speak. If you look at that, it's got lower tops, lower bottoms. They're here again. They're doing the same quantitative easing. And remember that we did have quantitative easing in the Falkland Islands. We've had it in Aruba, Malta, and Tanzania have announced that they're doing quantitative easing. And I found out today, believe it or not, that the city of Clearwater, Florida, is going to be using quantitative easing. So I think everybody down in the Florida area would be interested to know that. So it's just a matter of one city or one state or one country using, to see what's happening. Someone asked me where the bottom was in China. That's the least of my worries. China doesn't worry about me, and I don't worry about China. My main thing now is how high of a rally we're going to get in gold, and how much of a correction are we going to get in stocks. That's what has my undivided attention. So that's pretty much it. We really have to watch this open interest in gold and silver today, folks, and we'll ask for Mr. Z in the room, who follows it very closely, to look at it. John does a great job with this. I'll look at it too, and we'll try to come up with something. But if we get a good increase in open interest, somewhere around 5%, which is a considerable amount, that would tell us that we would be that we're getting ready to go much, much higher. When you get a $3 move in silver in one day, folks, that ought to ring some kind of a bell. We haven't had that happen since back in the days of Nelson Bunker Hunt, I don't think. In fact, I can't remember when we've had a $3 move in silver. That's a huge amount. That's certainly an outlier event by any stretch of the imagination. We'll see. Someone else also asked me if we were going to break the October 15th lows that we made. I believe we'll do that, and I believe we're going to do it quickly. And the reason why is there's just too many bulls out there, boys and girls. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.